greatly appreciate you taking the time to be here today. And what an interesting time to be together in our country's history. The dawn of a new era as we move forward with a government of national unity. It is our hope that this will bring a much needed policy certainty and stability. In fact, we think we're well placed as Nelson Mandela Bay to operate in such an environment given the collaborative and action-orientated approach of the Chamber. So today we move into the next phase. It's the launch of our Trade and Investment Desk, and it's really our proactive action arm to bring our vision to life and to unlock this bay of opportunity. And really one of the core strengths of the Chamber is our ability to bring diverse stakeholders together to support a common cause, and in this case it's the retention and attraction of investment and jobs in the Bay, and this is essentially about the collective of all of us working together for the greater good of our local economy. And on this front, I want to acknowledge and thank the following for their collaboration and partnership in enabling our desk to become a reality. Firstly, BDO, and then RMB and ECDC. Now also introduce our second panelist. This is Isaiah Mhlanga. He's the Chief Economist for Rand Merchant Bank. Prior to his current role, he worked for 3 local major investment banks. Isaiah started his professional career as an economist at the local office of the International Monetary Fund before moving to the South African National Treasury, where he was involved in economic modelling and monitoring of South African macroeconomic and financial indicators. He's also a columnist for Business Day. I'm sure many of you have probably read his columns. And really, before we get into the Q&A detail, I'm going to ask Isaiah to give a broad economic overview of where the economy is, and I know Billy's already instructed him to feature his slide of hope, so I'm really looking forward to seeing that, and also understanding where we're going as a government of national unity. And then after that we'll get into some Q&A with both Isaiah and Billy. Thank you. Thanks. Thank you.
Thank you very much for the invitation to come and participate. We come from a couple of years of challenges where the economy has been stagnant, GDP per capita contracting, all the social indicators going in the wrong direction. COVID hits, all of those things get accelerated. And we then entered into a new dispensation under the 6th administration with efforts to revive the economic performance and reverse all the socio-economic indicators. And there are many questions on whether that is durable, is it going to continue, and where does South Africa stand within the global environment, which has many changes that are difficult to navigate. So my talk today, I'm just going to give you a broad overview of where we see the economy. So I will start by depressing you and giving you hope at the end. Given where we are, expectations for growth are very low. Just under 1% for this year. Over the medium term, an average of about 1.7%, which is not nearly enough, almost equivalent to our population growth. And if the economy is growing at the same level as population growth, it means essentially we are stagnant. We need economic growth that is faster than population growth. Household spending under pressure, the high interest rates, high inflation that we have seen mean the consumer is under squeeze, which is 60% of the economy. So we can't get a lever out of that to lift the economy out of the doldrums. If we look at government spending itself, the fiscus is constrained. Tax revenue collections have not been growing as fast because of low growth. Our debt levels are very high, even in emerging market peer comparisons, we have very high debt. So we can't use government as a lever to boost economic growth. In any case, what we call multipliers, which is how much growth we get out of extra spending, government multipliers have been much more lower than what they have been 10 years ago. So government is not the solution to actually kickstart It has a role, but it's not the solution, which means we have to look to the private sector, which is where gross fixed capital formation by the private sector has to come in. And that requires confidence from people like yourself, which are business executives making decisions to invest in the economy. And that requires government to deal with the infrastructure issues, which is part of the economic reforms that I'm going to talk through. The global economy itself has been weak, which means we can't bank on the global demand for our exports. That can help, but it's not at a period where global growth can provide a significant uplift. From a currency perspective, which always matters for exporters, given that a lot of the automotives are exported to the rest of the world, but also general manufactured products, it could be pharmaceuticals are also exported, currency matters. But we're also importers of significant inputs into the production process. Where we see currency on average this year, we see it strengthening to 1830, and thereafter in 2025, continue to strengthen to 1750 before it starts to weaken again. If you look on the chart on the right-hand side, the longer term, if we take that chart much longer, you can see that the currency over the long term tends to depreciate by between 1.5 to 2% annually. That's an inflation differential between ourselves and the major economies. But within those depreciating long-term trends, there are periods where we see appreciations, and we are in that environment. Political risk premium has been compressed, given the outcome of elections that was quite peaceful, the formation of government within 1 month. That means political risk premium should compress. We do have a potential implication of this to inflation, where we think inflation is going to average somewhere between at about 5% this year. Next year moves to about 4.7%, after which it moves to 4.5%. So inflation at 5% this year, 4.7% next year, and 4.5% the year after. The implications for this is that interest rates for this year, we're not seeing a major reductions in interest rates. Only 25 basis points, followed by a 50 basis point next year. And this is precisely because from a monetary policy perspective, they want inflation lower at 4.5%. There's also even talk of reducing that inflation target band to 3%, which means structurally you have higher interest rate than we have had in the last decade to 2019, structurally, simply because our inflation remained quite high. But also global factors have lifted inflation higher. The US inflation is no longer going to 2%. It's going to remain structurally higher than 2%. The US Fed is also not going to cut rates quickly, but also not aggressively when they do, which implies that we have a higher starting point as far as our interest rates are concerned. Now, we had elections. We have been concerned for some time. The way that we thought about elections was to group the potential outcomes into some 3 groups in terms of what would be the government that would emerge. We had the reformers, which means those government officials that are committed to inviting the private sector to participate in critical sectors of the economy and block all the unnecessary and binding regulations for the private sector to play a part and help grow the economy. And then we have the rent seekers, those that are interested in self-benefiting at all expense to the rest of society. And then we have opportunists that could jump from one camp to the other. That's how we framed the potential outcome of the elections. And we had a couple of outcomes in terms of what it would mean. We had the grand muddle through, where we thought the status quo was going to remain, essentially neither improvement nor regression. And then we had an upside risk which would come from a government of national unity, which would involve the reformers taking charge of political and economic policy making that should help to invite the private sector to come and play a role. And then on the downside, we thought if the outcome of the election produced a government that is largely made up of rent seekers, that would have been negative for us as a country. And then the potential dispute of the actual election would have thrown a lot of risks into the economy. Confidence would have been dented. We almost had it, but it didn't happen because we had some parties such as the MK that disputed the elections, but at least they went through the court process and eventually withdrew. So all those risks have declined and almost dissipated. So where we are currently, it is in the upside risk with the government of national unity, which is largely made up of reformists, individuals and political parties, which means the private sector is going to be given space to come and play a significant role in the rebuilding of the economy. And that is positive. So from a social cohesion perspective, we thought that was going to improve. Ultimately, it is the economy that determines social cohesion. So if we have better economic growth, we will definitely see a better social cohesion, reduced crime levels, because people that have jobs don't have time to go commit crime, they don't have time to protest and disrupt business processes. So that actually helps in terms of social cohesion. Industrial policy, we think that is going to continue to improve. The collaboration that we are seeing today with public sector and the private sector is an example of that industrial policy uplift that should come out of the current dispensation that we have. And of course, all of this builds up the potential for fixed investment to improve. Now, this I will share the slides across all the people that are in here, but just to highlight the upside is monetary policy independence remains. Public finance also remains in terms of making sure that our debt levels are controlled, our interest costs are reduced as a country, which frees up capital for public investments. Macro management generally in the country improves, and capital markets, we already saw the repression in terms of political risk that came out through bond prices that reduced by nearly 100 basis points. All of that is an outcome of what we already saw from the outcome of elections already. And then from where we see policy going, if we look at the coalition between the DA and the ANC, you could add the IFP as the major political parties. They all agree on major issues that are binding constraints for the economy, or on major issues that can actually lift business confidence. There is much more closer alignment with what has been happening over the last 4 to 5 years to their individual policy positions. So we see better collaboration in terms of trying to boost economic growth going forward. Operation Vulindlela, something that you might have, that you might be aware of, a focus on 5 key critical areas that can unlock fixed investments for the country on electricity, on data and communications, water, freight and logistics, and of course the tourism sector as far as the visa regime is concerned. All of those things, there have been questions and doubts on whether they can actually be achieved and they actually mean anything to economic growth. So just to give an update, out of some 35 action items that lie across those, 16 have been completed, no further work required. 4 reforms completed, further work required. 6 are still in progress. Activities that have been delayed but still progressing, about 7. I think the most important one, if you look at the activities which are facing significant challenges, it's 0. That means a lot has been done along those 5 key areas which are quite important for business confidence. And that has been largely in the legislative space. If you look at the embedded generation for electricity, that has made a big difference in terms of our load shedding as we stand. Spectrum auctioning has been completed. Review of work visa has also been completed. The new Minister of Home Affairs have also alluded to that fact to actually fast-track the attraction of skilled individuals into the country. The national rail policy, which is quite important even for the automotive sector as well, and the bulk goods manufacturers, is also, the third-party access is also going to be opened up. Water licenses, we're seeing some improvement in terms of the time it takes to actually get an approval from 300 days to just under 90 days. So all of these things says there have been an improvement. Yes, it's in the legislative space to a large extent. The question has always been, does a change in legislation actually mean a change in the underlying economic activity? And the example that we have had in electricity is one point. It actually makes a big difference. What has been the impact so far? Because ultimately we can talk about reforms if there is no impact that is seen and felt at the ground. Those reforms don't mean anything. So 94% of the reforms achieved, 500 billion worth of investments unlocked because of those reforms, to a large extent in energy, and of course 22,500 megawatts of pipeline investments in electricity. That is significant. It can actually be a big game changer as far as our economic growth projections and job creation are concerned. And the reduction in data prices and water licenses, to my point earlier on. Just to give you this example, to say legislation is important where it is enabling, it can actually result in real change. It's electricity. In Q1, we have the energy task team that has been established. In Q4 of 2022, the licensing threshold was removed completely. And you can see in the first quarter of 2023, what is the quantum of registered projects in terms of their size of energy. You can see that big jump. It was a response to a change in legislation, which is why we are where we are. The private sector has been contributing to produce its own electricity, which means demand from Eskom has reduced. And as a result, business disruptions have also been reduced. So this is just an example of where legislation is enabling. What does it mean for real economic activity? And we need to see the same in the logistics sector, which we think is a matter of when, not if. And that is going to help in terms of overall economic growth. What will these things mean when they are done? So this is analysis from the Bureau of Economic Research at Stellenbosch University, which estimates once we've implemented all of these, it can lift economic growth to 3.5% from under 1% this year. That's a game changer from a job creation perspective. So that's why there is a need to collaborate between the private sector and government. This slide was specifically requested by Mr. Billy. I once presented at NAMSA, and because we were still in the run-up to elections, there was so much uncertainty, so much disbelief whether the private sector can actually make a difference. It's that trust deficit that always exists between government and private sector. Say, well, we see the reforms, but do they actually make a difference? I'm sure some of you, by judging by the color of your hair, you have used the post office before. In the last 2 weeks or a month or a year, potentially none of you have used it, even though you have used it 20 years ago. The private sector stepped in and provided a service that was previously done by government. But when government failed to do it properly and efficiently, the private sector stepped in. You can talk about the same in terms of education. Private education sector is thriving. It's coming in to step in where government is providing, but there are shortfalls in what it provides. In terms of the quality, you can talk about healthcare. The emergence of private healthcare industry is in response to an inefficient public sector healthcare system. We know in the airlines, I'm sure many of us that come from Joburg, we didn't fly SAA. But we are here today because the private sector stepped in and provided a service that was previously dominated by a state-owned entity. What's the point here? The point here is if we have seen these examples before, and you are seeing the economic reforms that we are seeing currently, specifically in energy, logistics, water, tourism, why should we doubt that the three on the extreme right are going to eventually come through? Already in terms of energy, the private sector have invested billions into the energy sector. So that's happening already. Why should we doubt then rail is going to eventually come through? Ports are also going to eventually see private sector participation, and eventually we are going to solve these binding constraints. All that I'm trying to say with these slides is wherever we have seen government open up and say to the private sector, come, let's collaborate, let's work together to solve these binding constraints, the results have been positive and they have been irreversible. This is the space where we are with Operation Vulindlela, with business forums like these ones, where we have private sector and public sector collaborating. The results tend to be positive and they tend to be irreversible. So this is why we also participating as a representative of RMB to try and push all of these potential outcomes that changes the lives of South Africans. Thank you very much.
Thank you. Thanks, Isaiah. And now I know why Billy was right that you should show that slide. And maybe, Billy, you want to maybe just comment on that slide of hope, because for me, when I looked at that, it also shows resilience and the agility of the private sector.
Yeah, thanks, Dennis. Once again, mornings, everyone. I think that slide, to me, demonstrates that we're going to find different solutions. I think if we think ESCOM is going to remain what we grew up knowing it as it was, we won't. I think even yesterday, I mean, with Bonga was on the call with the ESCOM CEO. You can already see that they are preparing for competition. They are preparing to get smaller. There is an alternative coming. Because I think one of the worst things we've done as a country is to do the same thing over and over and expect different results. If you look at the money we've spent on South African Airways, which we could have spent uplifting poor communities, we would have been better off. And I think with what we've done, I think the private sector has stepped in. The private sector hasn't exploited people. We are in a better state. And I think we need to look forward to a different Transnet, to a different ESCOM. I mean, if I were to ask people that are in the room, how many of you have solar panels? Probably 60-70% of people in this room already have solar panels. So you're starting to need less and less ESCOM. I mean, we grew up in our key holders having post office keys because we had a postal box, and I don't know how many of you have those keys today. Thanks.
Yeah, and I think what for me, if we were talking earlier as well, Dan Morikane, the CEO of ESCOM, as a chamber, we actually wrote to him because we were concerned about safety and security around Chatty's substation, which feeds the city, and if that goes down, the whole city goes down for up to 2 weeks. And he actually responded, and he emailed us, and he actually sent a team down to investigate. So I was actually amazed at the speed at which they moved. So I think the leadership changes we've seen at the SOE are starting to filter through those organizations. So that does give one hope. So Billy, from an automotive sector, I mean, Nelson Mandela Bay really is a very strong automotive hub in the city. We don't just have the OEMs like Isuzu here, we also have a very strong components sector, which is around over 40% of the automotive chain employment is here. How do you see the sector going forward based on what Isaiah shared with us from an economic perspective?
Dennis, I mean, I got stuck at the first slide because the first slide shows 0.9% economic growth. And if I look at the sector where I am, I mean, the results for last month, we were 14% down as a sector. I mean, 14%. And if you look at year to date, we are 7% down as a sector. And our projection as NAMSA was a 5% growth in the sector. And we're hoping for an improvement in the second half. It's going to be very tough because what we're starting to see in the sector, people are doing one of two things. One, they postpone buying vehicles. And two, when they buy down. If you look within the sector, what you call the cheaper brands, they are performing very well. People are buying down, and because they see value. But within the sector, I mean, the ownership of the various players is overseas based. So if you look at the global economic growth, I think the number I have is 2.7% growth this year and 2.8% growth next year, which is more optimistic than South Africa, and also a lot of us as the industry export. What that means for us is, because as a sector we are technology driven, so we've got to invest in technology because we've got to follow our consumers. I mean, our consumers demand that, and we've done that through the product offering. We now have hybrid vehicles. There are full electric vehicles. We now even have dual fuel vehicles where you've got vehicles running on CNG, which is a compressed natural gas. I mean, CNG, as an example, the bakeries, they use CNG to bake their bread. So whilst they use CNG, they use it on their trucks, which is more environmental friendly. What that product offering does is it requires training for us, because we've got to train our workforce for that technology. So the various of the players are already involved in training, because the auto sector plays a big role in South Africa. I mean, we're 5.3% of the SA economy. We are about 15% of exports. We employ, if you include the components manufacturers, we employ about 500,000 people. And what's key for us is to ensure that we protect that 5.3% of the economy, because we don't want to be in existence today and then disappear tomorrow. And doing that requires a lot of work from our side. And the biggest opportunity for us as well is through the African Free Trade Agreement. We might not be growing in South Africa, but we are in a growing continent. And so we've got to ready ourselves for that.
Yeah, and also listening to you, something to me which is also clear and which we really need to push hard as a country is we need to make sure we don't lose our manufacturing capability, and we must support local. You know, you've got a lot of these cheaper brands that have come into the market, but the importance of supporting local in terms of the whole chain and the impact on communities. You know, so maybe that's something we also need to drive as the Bay of Opportunity. And Billy, looking at the South African Automotive Master Plan, it's got very ambitious targets that it's aiming to achieve, and 0.6% of global production is where SA is today, and it wants to get to 1%. It sounds very little, but is that a huge ask, and is it possible to get to that 1%?
Dennis, it's a big ask if you consider what we went through COVID, because COVID, the industry went down by 25%, and we still haven't recovered. So if you look at the commercial vehicles, because of the transit issue, the commercial vehicles have recovered and are selling more than the 2019 numbers. But if you look at the passenger sector, we will probably only reach the 2019 numbers this year. Having said that, and also the automotive plan is calling for 1.4 million cars production. And on our sales numbers this year, when you look at it, we might even fall below 500,000. So those numbers start looking gloomy, and also we're 10 years away from it. But one of the things we need to start doing is to look at the opportunities. If you look at the African Free Trade Agreement, it's a huge opportunity for us. And I think the challenge we have as Africans is the inability to see opportunities within the trade. If you look at, I think in Asia, the intra-trade, which means the trade within that economic bloc, I think is sitting in the 60s. If you look at the European Union, it's sitting at 80%. But if you look at Africa, the intra-trade in Africa is sitting at 15%. Now, if you were to improve that number by 3% every year for 5 years, you would have doubled the trade within Africa. And to me, we need to start looking at Africa. And how to look at it, we need to look at, are we trading with Lesotho, are we trading with Botswana, within SADC and the continent. And I think if we look at that as an opportunity, that number is achievable.
Okay, and do you think Nelson Mandela Bay is the Bay of Opportunity for the automotive industry?
If you look at the Bay, you go back, you look at the history of the Bay, we've got to look at what we've achieved. I think a lot of people, I mean, the previous president mentioned it a few weeks ago. when we had municipalities, we were the first to set up a DLC. We were the first, I think when there were awards for the cleanest and well-run metro, we won it, which talks about the ability of the metro to do things very well. And if you look at the makeup of the metro, I mean, I call it we invested ahead of the curve. Over 20 years ago, we built a second harbor. I mean, why did you build the second harbor? You were planning for growth. And I think now we need to start playing to our strength. We talk about being the only city that's got 2 harbors, and we need to use those harbors. And I'm quite encouraged by what I see at Transnet. I think if we are able to get things right, we will be able to sort the harbor issues. And if you look at the ability to attract talent, I mean, we've got good schools, and within an hour you are out of the city, you can be a viewing game. So the metro is well positioned. If you look at the auto sector, I mean, we've got a new investor within the metro. They are able to tap into an already existing supplier network. And I think, I mean, let's be honest, we are only 1% of the global automotive sector. So if I see him as competition globally, we're very small. So fortunately within the sector, we're able to work together. I'm able to share with him my suppliers because the healthiness of those suppliers helped me. So I think the metro is really geared for it. But what I'm appreciating is whether you're talking to the premier or talking to the mayor, they know where their bread is buttered. I mean, the premier takes the automotive very serious, the mayor takes the automotive very serious, which makes it easier for us when we talk to our principals.
No, absolutely. Okay, shifting gears a bit, and I have to ask this question, Esai. When you look at the geopolitical shifts around the world, and the world seems to be going to very extreme places in many countries in terms of to the right or to the left, where we've taken a more unified, moderate kind of path. Do you see that as an advantage for South Africa on the world stage as we go forward?
Certainly, it is an advantage for us. And the one example that we can clearly see in the data, if you look in terms of the traffic volumes through the Strait of Hormuz, they have reduced significantly because of the conflict in the Middle East. And all of that is coming down into the Cape of Good Hope. And before they get there, they pass here, which means there is an opportunity to actually enhance trade for the Bay, given the 2 ports or the 2 harbors that are present here. So it is definitely an opportunity. The second aspect is this nearshoring, friendshoring of trade, essentially meaning countries that are deciding to locate their trade activities closer to their markets or in countries that are friendly to them. Yeah. If we position ourselves to trade with everyone, we can be one of that country where we can see significant investments, particularly in the automotive sector, which is to a large extent an export market. If you combine that with the Africa Free Continental Trade Agreement, we don't have to travel so much going through regions that are in conflict because we are close to the market in the sub-Saharan Africa. That offers an opportunity again to manufacture for the region, which does not require a lot of risks management to get the products into key markets. Maybe as a third point, there is no country that has ever industrialized or moved from low income to high income without manufacturing growing and playing a big role. There isn't. You can look across all countries, which means manufacturing has to be one of the sectors that play a big role. And industrial policy currently seems to have been, it's back in fashion across the advanced economies because they know income is built on the basis of manufacturing. The service sector then can follow once you have a strong industrial base, of which this bay of opportunity can play a role and take advantage of that.
Yeah, and we strongly agree with you. Our local economy reinvention think tank is really focused around reinventing our manufacturing economy, because we're also looking at the speed of change and how we can use the skills to find those global gaps as well, and also reinvent what we do. So that's very, very encouraging. And then maybe before I go back to Billy for another question, you spoke a lot about the African Continental Free Trade Agreement. When you look at our location on the continent and historically the economic performance of South Africa, do you think we're losing ground to the north of the continent? And what do we need to do to make sure we strengthen our focus here and we get our more than fair share of trade?
We have lost some ground to an extent. 5-10 years ago, we were talking about South Africa as a gateway to Africa. Mm-hmm. That narrative has died somewhat in the last couple of years. We have other countries that have emerged, the likes of Kenya, the likes of Cote d'Ivoire, that are also trying to position as the gateway to Africa. In part, it's because of our infrastructure, which has been quite dilapidated in such a way that it's difficult to get goods through into South Africa, into the rest of the continent, which is why the revival of Transnet and the involvement of the private sector to solve the logistical issues can play a role in repositioning South Africa as a gateway to the continent. But if you look across the continent, we are the most industrialized country across the continent, which means we have the capacity and ability to actually manufacture for the continent. We don't have to manufacture everything for domestic consumption. We can manufacture for export markets. That can be a trade goal or trade policy that we can do. And we stand a better chance given already we have the capability, we have the industrial base that have operated for so many years, just needs to capacitate and make sure that the infrastructure can support all of that.
Yeah, and I think that's also where true job creation will happen across the entire value chain, and hopefully the country will start adopting more pro-industrialization policies as we move forward. So, and then Billy, if we could just talk a little bit more about your company that you represent, Isuzu. You've very much focused on light commercial vehicles, medium and heavy commercials, and when you look at the continent, that's probably quite a good choice of products to have, and you guys have really gained quite a lot of ground in Africa. Do you want to maybe just talk about that and what you see as the biggest opportunity for automotive growth on the continent?
Yeah, I mean, the company I represent, as you said, it's mainly in light commercial vehicles and commercial vehicles. And also each vehicle we build at Isuzu is sold in Africa, so we don't export to Europe and other areas. And our business outside South Africa has been doing very well. I mean, during COVID, we were only 3% down on 2019. And last year, we've more than doubled that number since 2019. So there is a huge opportunity within the continent. And but what has made us strong, I think we spend a lot of time ensuring that the vehicles are suitable for the African market. And then secondly is how we approach the continent. I think that as South Africans, we miss an opportunity in trading with our African brothers and sisters. People don't go out and see these markets. And also when we talk to them, from a relationship building, we talk down because we've got answers, because we're South Africans. But I think if you go out, I mean, you've mentioned Cote d'Ivoire. I was in Cote d'Ivoire 2 years ago, and I met the Minister of Trade and Industry. Within that meeting, he wanted to sign an MOU. That's how hungry people are in the continent. After that, I got into the plane and I went to Ghana. I met the Minister of Industry. He says, you're going to meet the President. And I met the President and he had a press conference, which shows the hunger we have. But what we've got to do as South Africans as well is to look at trade opportunities within the continent where we say, like for instance, I'll use the industry, the auto sector. If West Africa produces rubber, I've got to be able to bring it into South Africa, have that trade with them. Because the mistake we make is to have a one-sided trade, and it's not going to work. But if we start trading with the rest of the continent, we're going to find a lot of opportunities, because what people are doing is they are trading outside the continent. And what we've done as Isuzu Motors South Africa, we've positioned ourselves as the point of contact for Isuzu globally, because it's very important for us. I mean, Thailand is Isuzu's biggest manufacturing. South Africa is the second biggest. And during COVID, we were able to demonstrate that South Africans have the capability, because we're able to deliver a vehicle without having to go outside to see how it's built, which shows the skills set we have. And we've built a good quality vehicle. And now what we're doing now is branching into the rest of the continent. And I think within the next 10 years, we will have other points within the continent. But that collaboration within the continent is very, very key.
Yeah, and I think you're touching on some very important points here. And, you know, like the mind shift change that's required as well. I almost feel, because I've also been to some of those markets, and I think South Africans have generally been very arrogant, where we think we're superior to the rest of the continent. You know, and I think we've been forced now to become more humble, given where the country is now, which is a good thing. It's horrible what got us to this point. But if you look at the collaboration that's happening on a national level, where business is working with government, and then on a local level, I think we've done a lot as organised business in the city, because obviously municipal service delivery is something that affects the enabling environment, which affects manufacturing in the city, you know. And I mean, a lot of people are rolling up their sleeves and doing important things. So, for example, the technical expertise from business. So, the sanitation system of the city, we actually got engineers from companies like Aspen to work with the municipal officials to understand what the issues are, put the right plan together, and then to fix it. So they've actually improved the efficiency rate on the system from 15% to over 80%. Now we're busy working on the electricity infrastructure, because you have unplanned power outages, because it's one of the side effects, I guess, from load shedding and lack of maintenance. So if we can keep doing these things and get our infrastructure restored, do you think it will make it easier then for us to strengthen our business case as a manufacturing city?
Yeah, no, definitely. I mean, it goes without saying we've got to sort those issues. But I think what we also need to do, I mean, is also, because remember, these businesses, decisions are taken outside of the country. We've got to manage the perceptions. I mean, you'll see now one of the OEMs is having a strike, and the decisions are taken outside. And one of the mistakes we mustn't make, like in the auto sector, the manufacturing of vehicles in South Africa is not a God-given right. These things can be taken away through a stroke of a pen. So we've got to make it a point that we understand the balance of power. We've got, I mean, you've mentioned the number. We're producing 0.65% of the global automotive. It's easy to switch that and import the vehicles. Australia is a good example. If you go and you study the Australians, they used to have a bigger automotive sector than South Africa. Today, not a single vehicle is manufactured in Australia, but guess what? Vehicles are sold in Australia. In South Africa, a good example is the textile industry. 20 years ago, we had a strong textile industry. Everybody here is wearing clothes, which chances are fully imported. So the automotive sector, we've got to guide it and not be a case study of what used to be an industry and it's no longer an industry.
Yeah, very important points. So what I'm going to do now is I'm going to ask you both a quick question, and then we're going to see if there's any questions from the audience. So what I want to ask each of you, maybe starting with Isaiah, is what do you think is this city's best kept secret?
Look, I think you have two harbors. You're potentially the only metro that has that. And given the risks in the Middle East and the rerouting of trade channel down into SA and Cape Town, that gives you an opportunity to actually play a big role. But other than that, if I look in the room, It's business people that have a lot of time to come and collaborate with the public sector to solve the issues that can make business work. The example of Seattle that was given by my colleague earlier on is a case in point. You can also throw in other examples. In India, they have what they call Gift City, which is essentially where they provide incentive for any technology company to come, tax incentives, they solve your infrastructure. Guess what? When you call a bank or when you call a cell phone company, your call is going to be answered in India. Such basic skills that are required such basic skills that can be deployed to South Africa and reduce unemployment rate. My point is, in spite of government, business can thrive if it collaborates and solve their own locality issues with communities. At the end of the day, the communities will protect businesses because they know they have a stake in them. Just give communities the stake in your business environment, they will protect it.
Thank you. And Billy, on your side, what is the best kept secret of Nelson Mandela Bay?
I see now you went first and you took all my points. I don't know if you can swim because you cannot talk about harbors if you can't swim. I think if we look at the metro, I mean, one of the best things is leadership. If you look at nationally, some of the leaders, they are from this place. I mean, I learned now today Mr. Ninaber is from here, Praat. If you look at Investec, the leader is from here. You look at Transnet, I mean, I can give you a long list. So this metro has produced a lot of good leaders. And sometimes during the difficult times, we've got to tap into them. But it also talks about the ability to produce things. And then secondly, I think we've experienced things that the nation is going to experience, like the metro. We talk about the government of national unity. I think we're 2 years into that in the metro.
Yep.
And I mean, Dennis, one of the things you've been able to do, when you know that there's going to be a change in the metro leadership, you are able to go and meet the new mayor. And that's something nobody talks about. So we've been able to manage that instability. And I think the metro itself, I think like I've mentioned before, the infrastructure, the schools, I think it's something nobody talks about. And also the accessibility of leadership. Like for instance, if there is a big issue, the premier is easily accessible, or the MEC or the mayor. And in other cities, you are not able to do that. You will talk to a PA and it will take forever to sort the problem. And it's one big thing that you are able to do in this metro.
Yeah, no, thanks. I think those are very good inputs. And I mean, I think another best kept secret is also we've got this wide urban sprawl, but somehow we can have our arms around it. And I think it's not too late to rein in the decay. Where with a lot of the interventions we've been working together with the municipality and others, I think good progress has been made, which talks to the spirit of the people here and the willingness to make it happen. So I think all that's left for me to do now is to thank our partners, BDO, RMB and ECDC, for their support of the Trade and Investment Desk, and you'll hear much more detail on that in the coming weeks. And their inputs are also going to be vital because as partners, they also have been looking at the investor journey and what role they can play through their own resources as well. So thank you all for your time. I know it's a lot to give up your time. I hope you found value from this, and I hope you're also inspired to be part of the collective action in unlocking the Bay of Opportunity. And please do join us afterwards. There's some light snacks and refreshments. Thank you.